Is this the start of a stock market crash? That is the million-dollar question at this point, and I've got good news and I've got bad news. So let's get the bad news out of the way. Unfortunately, stock market crashes always have to start from somewhere. So is it possible that this could be the beginning of a stock market crash? Yes, it's always possible at any point in time. The good news, however, is if we look through the data points, it really doesn't seem like a compelling argument to say the market's going to fall out of the sky. Oh my goodness, prepare for this big, deep, dark, dirty recession. Let's walk through those data points now. So on the SPY daily time frame chart, in its simplest form, we have lows, soft, higher lows, soft, higher lows, higher lows. This is the highest high in the trend sequence. We actually produced a brand new all-time high in the morning session of today's session, and we've seen a pullback. Great. A pullback to what? The top end of the Monday and Tuesday balance range, where you can clearly see, again, there's still about 10 minutes to go until the market actually closes, buyers are stepping up. There really hasn't been momentum continuation underneath the top end of the two-day balance range from Monday and Tuesday. So daily time frame chart, some profit taking up here at the all-time highs. Sure. Is it certainly concentrated over to the technology cohort? I would argue yes. We're seeing concentration in the Magnificent Seven really yield this deeper pullback with names like Tesla down over 8%, Meta down over 3%, Amazon 2%, Google 2%, NVDA, the one stock to rule them all, down over 5%, getting closer to 6%. It's a concentration thing, and we talked about concentration risk yesterday. However, as we start to expand the scope of what we're looking at in the market, let's take a look at the small caps. I mean, on the better than expected inflation data this morning, my goodness, talk about a gap up, talk about a multiple sigma move outside of the upper bound of the weekly expected move, trading into these equal pivot highs from back here, if not threatening a breakout of those pivot highs. So is there really sustained selling pressure across the broad market? The answer has to be no. You could also just briefly glance over here at the weekly performance of the S&P sectors and notice that you're not seeing a bloodbath. The names that are down, it's going to be your communications sector, the technology sector, consumer staples aren't doing so well. But it's not like everything's red, and it's certainly not to the degree where, oh my goodness, we're down over 5% on any given week. I mean, Tesla's down over 8% in a day, but none of the sectors are down anywhere worse than you can see right here. The worst sector is down 1.37%, and that's the communication sector. The tech sector, the heaviest weight risk on sector, down 60 basis points on the week so far. I mean, that's not bad here, right? So all things considered, I'm not seeing the argument for, oh my goodness, the S&P 500 specifically is going to fall off of a cliff and build into this big daily downtrend. If you look at the market internals for the S&P, or really just the nicey side of the exchange, this breadth ratio has been positive all day, never flipping negative. Look at the volume inflows to the New York Stock Exchange, getting up into substantial reads at 300 million. We didn't even have that yesterday when the market was breaking out, obviously for that huge run, right? If you look at the advanced decline line, it's in trend higher zone. Now, the index score is what matters, right? This basically weighs very heavily all of the core list of companies that make up the top, 10-ish% plus of the S&P 500 weighting. So to see this down and the market also down, that's adding up. But at the exchange level, the really broad-based level, there was participation in the upward direction. Look at the cumulative build out of the tick. It's actually up and over that substantial read mark, which is 5,000 net positive or negative. So that's making sense to me that the buyers are, at the exchange level, and certainly acknowledging the sell side pressure from today. But at the exchange level, broadly speaking through the marketplace, we are seeing more of a bullish inflow than a bearish outflow. If you take a look at something like, let's just move along. I mean, the dollar is obviously falling off of a cliff with inflation also coming in with a beat this morning. So that's helpful for the broad market, right? If we look at interest rates, they're certainly moving in the downward direction. Once again, helpful for the broad market as a whole, specifically those smaller cap companies. If we look at some of these, risk duration indications, this is no big deal. You're not seeing any major sort of change in sentiment out of these as the market's breaking down on today's session. So once again, the selling is extremely isolated to the Magnificent 7 plus XYZ that you want to count there. If you look at credit spreads, they're actually ticking down On the shorter run, SHY, HYG, mild uptick out of the IEF LQD, but nothing crazy out of credit spreads. You're not seeing risk of a credit event right now. HYG, talk about a contrarian indicator, right? Breaking to the upside, playing catch up from the bearish divergence that it had prior. Remember that this to this, into at least yesterday's close, was a bearish divergence with the higher high out of the S&P. Today, the HYG broke in the upward direction, obviously spurred on by the inflation read this morning. That is helpful for the broad market. If we take a look at what's going on over here in new highs versus lows, again, big move in the upward direction. If we bring this down to a daily time frame chart, this is today's activity. Huge amount of new highs versus lows out there on the New York Stock Exchange. Let's take a look over at the, let's move on over here to the SPX A50R, big recapture of the 50% mark, and then sort of the one that's going for glory is just the RSP equal weight S&P 500, tying all the pieces of the puzzle together. There's no sustained breakdown across the majority of the companies in the S&P 500. Once again, is there a weighting and concentration risk in these names? Yes. Does that mean you should be out there shorting the S&P hoping that this thing falls off into oblivion? I would tend to think not. If we just go back to the S&P 500 now to give you some actionable takeaways into the end of this week, we only have one trading day left. This is an impromptu update. I certainly think that any consolidation here on Friday sets up the opportunity for a continued pullback early next week to possibly test the breakout area around 549.50. If that were to take place, awesome. I will be looking for longs around this particular level. If the market closes over, and again, we've got about 5 minutes to go until the close. If we close over 556.90 and tomorrow we just consolidate inside range, guess what? We have a very classic range building out, very similar to what maybe happened back here. Inside consolidation, we'll just play balance rules. This is a trade, and this is a trade in here to get down to our pullback level, and then changing tone and saying, can we find some sort of reversal pattern off of that 549.50? So all good right now in terms of the situations outlined. And again, let's go to an hourly time frame chart and acknowledge what happened today. We did technically open on, not technically a gap up, but towards the highs of the prior day's range. We did not find any acceptance over the range nor inside of the spike from the Wednesday afternoon. We broke down aggressively, retraced the thin structure, and right now, previous resistance is trying, it's not doing the greatest job, but it's trying to act as support. The momentum has certainly slowed down. So as I'm evaluating the charts here, what's top of mind for me is whether or not we can pull off pullback buying opportunity entries or not. And when I say or not, that would just really yield consolidation here and then being patient, probably looking for a short from maybe point A down to point B. Nothing where we're overstaying our welcome. We're not second mortgaging the house. We're not really, swinging for the fences on that. But if there's a lower high underneath this, then yeah, there's more thin structure to retrace to the downside. At point B, we know we're looking for that daily higher low, 549.50. So the game plan really hasn't changed much. If we go on over to the QQQ, let's take a look at the daily time frame chart. Of course, there's more damage over here, noting the weight and the concentration with that Mag 7. So, big bearish engulfer. I'll give credit where credit is due. It's closing, or it's very likely to close in the next, 2.5 minutes or so. Underneath 495.50, there was no support there. So any lower highs below set up what? Just the rotation into the lower edge of this week's expected move, which is the top of the breakout area from back here. So no major surprises. I think that a close down here sets up, once again, this for a trading opportunity tomorrow. If we spot ourselves finding buyers at 486.75, I'd be very interested in potential long opportunities, right? So all of this stuff is top of mind as we come into tomorrow. We can briefly, we already talked about the IWM that speaks for itself. Let's run through the core list of companies really, really briefly, right? So pullback from an all-time high. What's the daily trend here out of Microsoft? It's certainly up. We're only going to do this one time, and then we'll just sort of, speed round through the remainder core list of companies. The trend is up. This is certainly an opportunity for a higher low. If we can support over this breakout point at 450.75, it's still a daily higher low. So thinking about that, and of course, the best bullish situation would be a recapture of this level up here, 460.50, right? So watching for those things out of Microsoft. If we take a look at Apple, again, pullback, yes. Where's it from? The all-time high in the name. Any sort of sustained higher low over here is good to go. NVIDIA, oh my goodness, down almost 6% on the day so far. What's it pulling back into? The breakout point of what could be considered the double bottom. Now, again, another thing to be very, very transparent and clear about, Are you buying candles that look like this? Am I out there buying NVIDIA right now, right here off of this area of potential support, prior resistance, trying to act as newfound support? No. What we're doing is waiting to see, okay, is there some reaction from the buyers stepping up at this level? On the hourly time frame chart, what do we see? I mean, multiple opportunities for buyers to try to step up here, but there's nothing constructive in terms of an actual entry point on the retest just yet. So tomorrow, if we hold up, and here's, a trade idea for you, we could probably get rid of the 129.25 now that that's been disrespected on today's session, and more appropriately watch out for something like 130. If we're looking out for 130, and we'll talk about this again during tomorrow's pre-market prep, which will kick off at 8 o'clock, the graphics department did update the banner, so look out for that. The trade here is what? You're going to squeeze out all the shorts late to the party if you can get some sort of 5-minute setup over 130 as a trade tomorrow into 133 and possibly looking for a further squeeze to retrace more of the move. If there is no breakout over 130 on tomorrow's 5-minute session for some way that we can manage risk here, and it continues to drift under 127, there's not going to be a pullback long. So watching very closely for those types of indications, again, not only in NVIDIA, but all of these names that are pulling back more aggressively on today's session, right? We can move along to Google. We'll see something very similar. There's the ding, ding, ding. Markets are closed, pencils down. You can see the big retest of this breakout point here. Nothing confirming any sort of reversal just yet. But again, moving to the hourly time frame, you'll probably make note that tomorrow is going to be all about the Stevie Wonder trades. If we can take out the top ends of these bearish consolidation flags, a squeeze right back to the upside is not unreasonable. If there is no squeeze or break over that for a Brigade bolt on the 5-minute chart, then guess what? Probably neutral through here, and then maybe over time, this builds out more of an inverted head and shoulders. Is that a possibility? The answer is yes. If we flip into a firmer daily downtrend, that's where I'll change my bias to start saying, you know what? We're going to start trading shorts. The market might go to zero. Who knows, right? That's sarcasm, of course. Anyways, moving along to Amazon. What's the concept over here? Remember, we had talked about, and we've been talking about, this ascending triangle. It did not break out on the micro hourly version, so a flush of that trend line brings us into, okay, let's see if we can get a stronger daily higher low retest over the top of this prior area of resistance, which led to a breakout. This actually looks somewhat better with the afternoon consolidation yielding some sort of daily lower wick there. It's not the most impressive thing I've ever seen. However, this is a clear flat top breakout. As a scalp tomorrow over this set of highs, which let's just hover the cursor and get you a number, 195, could see a retracement. Even if you only make it into 197.75, there's a decent opportunity to be able to manage your risk on that potential move. So these pullback opportunities are setting up. I wouldn't say concretely that we have anything to action on just yet, but I think tomorrow is going to be one of those days where there's nothing to do, if you know what I mean. There's going to be opportunities that present themselves on the heels of a move like this. The other thing to point out is you don't want to fall victim to what's classically called and dubbed HBS, right? You guys know what this means if you've been out to the show in the morning. Use your imagination for the H, and then bear syndrome. Really excited bear syndrome. You don't want to fall victim to that and start second mortgaging the house. Oh my goodness, markets are going to collapse. Everything's going to zero as we're coming into known areas of potential support. Is there a change in tone out of this market? Yes. One of the things I've been saying over the past couple of videos is that I was not a believer that we had stronger sellers or there was a major sort of profit-taking action that was taking place. Now today has sort of proved that somewhat wrong, right? There has been some more aggressive selling. We have seen a pullback, specifically in these heavyweight tech names. I would not say that there are aggressive sellers or stronger sellers in the S&P 500 because we're still technically in an hourly uptrend. But back over to Metaverse, in terms of what we're looking for over here, this is still an hourly time frame chart. We're just testing the top end of the range. Any sort of high or low tomorrow over 514, I'd be thinking about upside and thin structure retracement. The ultimate target would be up here at 529.50. Now, to play out these situations in full, this is a 100% retracement first and foremost. Very rare that you go straight through the bottom end of the range. If you do get some sort of move that gets into 529.50 and you see a reversal, guess what? Now you're dealing with a daily lower high. Are we more willing to trade short opportunities when we're in a daily downtrend or the emergent beginning of a daily downtrend? The answer is yes. We just don't have that yet. Until proven otherwise, this is still an opportunity for a daily higher low, not a complete reversal of trend. Let's move along to Tesla, where perhaps even more damage was done. How did we close? Oh, just shy of 8.5% in the downward direction. You can clearly see this bearish engulfer on today's session. One of the things we had described in the pre-market prep as well as in the Wednesday update video was just these very incremental higher highs after a huge rally to the upside, that's always a situation that you want to avoid as a new money long. Any new money long is just massively disappointed when you're not really getting follow through to new 2-day highs. So this was not a strong long watch, in the first place here. And this isn't really a shocker to see this pulling back after the magnitude of the run that it's already experienced. So as we zoom out on the chart, what's the opportunity here? It's really just to look for, can you spot a higher low here? Is there any, let's bring out the fibs even on something like this. From the origin of the breakout to the most recent high, the 38.2 is kind of exactly where we've closed today. If we hold that and, produce some sort of consolidation back up here, guess what? Massive weekly bull flag. Any continuation into the top of this gap is your 61.8. You can look out for these pullback areas. And once again, I think now is the time where you've got to put your money where your mouth is. You're someone who says, we're in an uptrend. We can't chase new higher highs. We've got to wait for these pullbacks. We've got to wait for a way to manage our risk. Now that that opportunity is brewing right in front of us right now. Now that doesn't guarantee it's going to work out, but it's at least an asymmetric risk reward opportunity that I'm willing to entertain into the end of this week, even early next week. Let's take a look at JP Morgan. This is a bit of an outlier considering earnings tomorrow morning before the bell. Sideways in this range. If it breaks out, great. That would be helpful, preferably on the earnings announcement, any sort of gap up, gap fill reversal. That keeps the broad market, namely just the S&P 500, of course, more of a positive indication walking forward. Netflix, this was actually one of the trades that we caught. This was a beautiful move. We had talked about this explicitly on the hourly chart from the pre-market prep. I'm going to go dig those, dig that footage up and put it in this video maybe, or just post it somewhere. But anyways, double top, lower high. This recipe for downside was probably the most beautiful opportunity across the core list of companies that we were watching all day, just because the technical setup made so much sense. We had a double top. Once again, we'll go through it one more time. You could add this to your playbook, right? Double top, which was a failure to accelerate out of this range. So now we have highs, lower highs, starting to build a downtrend. We have a neckline with a lower high under the neckline. Bears are in control at that point. You've seen a look above and a failure back into the range. The target is always the opposing end of the balance, which in this case was at 663.75. Obviously, it went much further than that, but even if you just captured the move from the gap down, and even if you just caught it here on like the 5-minute inside bar that broke down, let's go to the 5-minute chart. So here's the trade of the day. Inside bar, bearish 3-bar play. Under the lows you're in, stop is over the high. There's your target number 1, and then any follow through is gravy underneath on the runners. Hopefully you caught a piece of that Netflix move. That was awesome. If we just bring it back to finish up the core list of companies to an hourly time frame chart here, AMD is going to wrap us up. And what do we see? Great retest of this prior set of highs. So not the greatest hold of the more nuanced 183.15 we were talking about with the open being above. I'll give credit where credit is due. The sellers did break it down a little bit further, but the hold of this 178 and then the rebound back into the afternoon session here does strike me as looking much healthier than a lot of the names we've seen in today's lineup. So AMD will be a top watch to see if number 1, we can poke up and over 183.15, or if this wants to really build out a double bottom and rinse and repeat, sort of what we had back here, sort of pie in the sky double bottom, break over the neckline, double bottom, break over the neckline, equal high is easily the target. Some sort of 5-minute setup that gets you there on the intraday is definitely worth entertaining. So that's a really brief and abbreviated session for almost everything that I saw that was interesting on today's session. The biggest takeaway here is that if you're looking for longs or more of a resilient market, look to the S&P 500 because it's more diverse, including financials and some smaller companies. Obviously, 500 companies in the S&P 500 versus the NASDAQ 100 listing of companies. NASDAQ's going to be your continued better short if the tech sector is going to remain weak, and the broadness of the IWM would speak to me and say, okay, you know what? This is broadening out. We saw the evidence across some of those supporting evidence charts, namely the RSP, the HYG, credit spreads not expanding, the internals also massively bullish here. When we take a look at the NYSE side of things, just as a very brief recap, right? Look at this. Volume, market on close orders pushed this thing far up and over 300 million, stayed in trend higher zone, cumulative build really solid as well. So you guys know where my head's at. I think that this impromptu video answers the question, is this the beginning of a stock market crash? Again, two sides of the same coin. All the evidence that I can see would suggest absolutely not. But unfortunately, we have to acknowledge the reality that at some point, there will be a downtrend at any point in the future, and it has to start from somewhere. So if you want to come back in a week and tell me, haha, I told you so, this is the start of a crash, so be it. But if I'm looking at the weekly time frame chart, this looks like, to me at least, nothing more than an opportunity for a bit of a pullback in a market that's been fairly extended. The final thing that I'll show you, if you stuck around, there's grammar, to the very end, let me know if you saw it by dropping something about the trend channel in the chat or in the comments section down below. I meant to include this in last night's episode of the Midweek Market Update, but just totally blanked on it. Anyways, we are just pulling back off the upper range of a trend channel. Is it possible that we could find support at the midpoint of the trend channel range? Yes. Would that be somewhere in here? Sure. The top end of the prior balance range that we were just referring to. So that is going to conclude today's impromptu update on the S&P 500, all of the evidence that I can see. I do feel as though maybe I've been a little bit emotional in the sense of trying to reinforce the idea that the market is not going to crash here. So I want to check my own bias a little bit, and you guys can let me know in the comments section. Are there any bearish data points that I've missed here? Is there something that I'm not picking up on that it's like, Matt, this is not really an objective take. You missed out on this component. Let me know. Again, I'm trying to acknowledge that, sure, the heavyweight risk-on components of the market, they pulled back today. There's no doubting that. But if I look broadly across the data set that I typically watch, I'm not seeing the evidence for sustained weekly downtrend, oh my goodness, crash, Armageddon recession. So let me know in the comments section. If you made it to the end of today's video, I appreciate you coming out to the show. Do me a favor, hit the thumbs up button and subscribe, and we'll see you tomorrow morning at 8 o'clock for the PPI release. And yeah, it'll be a great time up in the penthouse. So we'll see you there. Adios, have a green trading week, and we'll see you in the next one.